All right, good evening, team. Welcome, everybody, to our weekly recap. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Glad to have you with me this weekend or this Sunday. And we do this every Sunday on the weekend, where we recap the week, kind of preview the week as well. It is, what, 8:30, 9:30, almost 9:30 on a Sunday, July 21, 2024. Let's take a look at futures this evening. Dow futures are up 41 points off the highs. Nasdaq is up 61 off their highs. S&P is up 10 off their highs. Russell's red. Interesting. So the big news today was that President Joe Biden is not running for re-election. Now, we could talk politics all day, but this is not a political channel. I don't think my political opinions really matter. When it comes to the markets, yeah. So, what is my reaction towards it? Really, I don't think that has any bearing on markets at this point. We talked about the seasonality, the first 2 weeks of July, how important they are, and how important it is to take advantage. And that's what I'm going to pivot towards right now. You could see here, just for the month to date. Pretty great. 9 out of 11. Amazon and Nvidia did not work out this week, but Palantir worked out. Mara, which was the Bitcoin proxy we talked about, Bitcoin going higher. Robinhood we caught as well. Small cap summer. So well done. We got 4 out of 6 this week. You can see the results here, 4 to 6. Amazon and Nvidia did not work, unfortunately. So Amazon's Prime Day, even being a record, didn't work out. But back to the president and politics, a lot of people try to make the correlation. And I'm not going to sit here and say there isn't any correlation. My point I'm trying to make is when it comes to things we cannot control, obviously the stock market been doing this for a while. All of you guys have been as well. If you've been following us, things can just get wacky. But for now, the best thing we can look at is price action. And right now, the price action is showing me we're going to have a little bit of weakness. Again, second half of July tends to be weak. Put yourself in the position of a broker for a second. Pretend you're at a desk and your job is to sell stock to clients. Pitch to them. So if I get on the phone and call you today and I say, hey, NVIDIA is now about $23 off its all time high. Would you be interested in buying? You would probably be like, maybe I can get a little better of a cheaper price, a little lower of a price. And that's where you get price action weakness. If I called you and I said, hey, Apple is now trading about $13 off its all time highs. Do you want to buy ahead of earnings? Kind of a tough proposition, right? When you want to see the earnings from these companies, again, all we've had is multiple expansion, meaning that the cost of the stock has gone higher, yet we don't know their earnings. So what we call PE, price to earnings multiple, is only growing because we don't know their earnings. Now, I'm not going to sit here and say, yeah, we're screwed. We're all going to tank because Biden's not going to run for re-election, or because Trump is going to win, we're going to tank, or we're going to soar. It doesn't work that simple. Boy, do I wish we could just peg everything to a presidential candidate. Guys, doesn't matter. Over time, stocks just go up. It's just the reality. Over time, stretched period, every 10 years, the stock market has made money, regardless of who's in charge. Now, again, everyone has their preference in terms of politics. Everyone will vote accordingly in November. Best of luck to everybody. I'm going to vote as well. But again, we're still a little ways away from the election year. Right now, we're going to focus on price action and the things that we know, we have researched, and we know, at least have an idea of predictions wise. Now, if you're just going to be, hey, Trump is going to run away with this, what should I do with it? Well, we already know that we're going into a lower interest rate environment. And it's no secret that former President Trump is a fan of lower interest rates. He used to be a real estate guy, obviously. So that's going to be very helpful for the small caps, the guys who like to borrow money. Big cap tech, it's no secret he's had some clashes with mega cap tech, maybe mega cap tech companies on the West Coast, those Silicon Valleys, maybe inching a little bit more to embracing former President Trump's future policy if he is elected. Again, there's a lot of moving pieces here. So you kind of have to focus on what will work, what will not work at that time, in comparison to presidents. But I wouldn't make any huge bets in terms of, oh, he's going to win, then for sure I'm going to buy the stock. I think as we get closer towards the race, closer towards, the actual election day, we can go from there. And not only that, but November is a very seasonally strong month. So I think regardless of what happens, the market's going to go higher. Whether it be former President Trump for his, future tax cuts, or if Vice President Harris runs and wins, again, that could happen, then she would continue on Biden's policies, which have gotten us to all-time highs. It's not like we haven't. Maybe they continue the CHIPS Act or expand it. Again, so many different parts here. So again, it is only July. So for right now, all we can do is focus on what's in front of us. So let's go ahead and go to this name like Netflix. I talked about Netflix prior to earnings on Thursday, and I said it would pull back to 600. We tagged 600 actually on that earnings right here, 600. We tagged it on some overnight price action. But we're still holding over the 100-day moving average, 627.27. I want that to break. And if that does break, I'm going to target 600 to around the 585 zone, 786 Fibonacci level. Again, rejecting all-time highs. We've seen this before from who? Amazon. We've seen it. So this is nothing new. You get that break, you get a pullback. Same thing with Netflix right now. So again, double top possibly. In my opinion, Netflix, of course, will break out over time. Netflix is a powerhouse. They had really great earnings. But again, seasonally weak, second weeks of July. We're going to get into August, guys. August is notoriously quiet and choppy. So if you want to take some time off from trading, not a bad time to do it. But we will be here, obviously, giving you guys information. In August, we do not have a Federal Reserve. In August, there's going to be no Congress. So regardless of who's president, there is no Congress running. They get their recess time. So, volume is going to dry up a little bit. So again, I'm kind of getting ready to put our bear hats on. It's not a political thing. It doesn't matter because we know the first 2 weeks of July are strong. The second 2 weeks of July tend to get weak, and then August gets weak. In terms of the stock market almanac this week, there is no bull bear or anything like that. Just pretty much a neutral week in terms of the almanac. So that was Netflix here. Let's take a look at the NASDAQ futures. And NASDAQ futures, again, were up slightly, about 0.33%. Target here is about 19,503. So if we break the lows, I think if we break below 700, 19,700, I want to target here the 503. Now, what could change this? What could make this dynamic where, wait, we flip, we get a little more optimism? Maybe the idea of President Trump winning, former President Trump winning re-election, which would bring down corporate tax rates. Obviously, the markets would love that. But again, that's a fluid situation. We don't know the future in terms of politics. At least I don't. But as for now, in terms of price action, above 20,000, that's where I would go long to the 20-day moving average of 20,250 or so. So NASDAQ, to me, I'm leaning short. I'm leaning short, with also technology companies until we breach above 20,000. Here's a couple of names that I am watching this week. For example, AMD is below the 200-day. Look at this channel, downside channel, very similar to a name that we all know and love, Tesla. And guess what? We got down to 140. If you guys remember back in February, we said that Tesla has more downside room. We got to 140 and then we bounced beautifully. Played the run up, played the run down. I'm looking at AMD for the same. We're looking to see if we can get below 148.35. That's the lows right around May, the early May lows. If we can break below that, I just want to go ahead and get back to 122. And then right there, I think that someone can pick up the phone, a broker, and say, I have AMD that was trading at 200, now trading at 220, almost 50% off the highs. Not a bad sales pitch, especially if AMD has decent earnings. But again, how much has been priced into the AI trade? How much has been priced into technology just growing and growing and growing? Sometimes, guys, people just take profit. It's completely natural. NVIDIA is a darling. We know NVIDIA makes money. We know they have their orders and they have pricing power over their semiconductor chips. But sometimes, again, profit just happens. So if we break below here on NVIDIA, right around 116.18, 110 is a very major possibility. The money target would be 97.32. That fills your gap. That's your previous all-time high. That would be to check back to an upside move, retest of the previous highs and getting higher. So that's what I'm looking for. We also posted the stocks to watch this week. Micron, Tesla, Netflix. Talked about Tesla, kind of leaning bearish on that ahead of earnings. Doesn't mean I have to trade it. We saw Netflix on Thursday. Didn't trade that. I just gave the heads up. I expect us to break below 231.49, and then we'll get to around 212 or so. The question remains to me is that do we test around 225, which is the check of this top end of this channel? And if we do, we're going to bounce. So I want to see if bulls can hold that 225 level. Doesn't mean I want to short right now. But again, I'm leaning short. If we can break that below that, we have a couple of gaps to fill. So that's what I'm looking forward in terms of Tesla. Let's take a look at Micron together. Micron, I have an alert below 113.50. Then I'll target around 105 to around 110. 110 should be on the cheaper side. You're starting to see semiconductors, stuff that was making all this money earlier, getting a little rotated out. I would feel better if we started seeing Russell getting some love to continue the small cap summer trade. Let's take a look at IWM. And IWM, I'm just looking for a break above 219.60. Okay. That was a level that we were really, really looking forward to getting. We got it. IWM was a great trade this week. It was one of our winners. It got full 100%, which was great. We kept the in the money strike as our stop, and it worked out. Didn't work out for Robinhood, but it worked out for IWM. 226.64 is your peak. I'm looking for 228.83. That would be the extent of the rally, at least short term to me. I still think IWM has more upside potential, at least fundamentally, with a lower interest rate and a lower dollar. Let's go ahead and go to the dollar and kind of get into some macroeconomics. And in terms of the dollar, not tons, other than the fact that we're below the 200-day. Good sign. If you guys remember, I drew this a while back, the shaded box, looking for 101. I'm pretty certain that we will get there as we get into the fall season. So be on the lookout for that. We're waiting for the first rate cut. If we get it in July, all bets are off. Who knows? But September is pretty much baked in. The question is either a 25 basis point cut or a 50 basis point cut. So again, we will see what we get. I don't know what's harder, predicting presidential politics or the Fed's moves. Who the hell knows? But in terms of interest rates, let's take a look at it. Downside channel, and you can see 4.1% as being support, but yet we're kind of in the middle of this channel. So kind of tough to call it here. We're about to get a death cross on the 10-year treasury yield. A good sign. The last time that we had a death cross, unfortunately, we bounced rather quickly. So it is a bearish sign, obviously. But last time we got there was in February of this year, and then we finally untangled that to a golden cross in April. So it lasted about 2 months. Let's see if this death cross, the 50 below the 200, lasts longer than that. Even if it's 2 months, could that get us down to 4.0? Fingers crossed. We will see, because that would be the help. That would be the extra rocket fuel for stocks. Right now, what's bringing up stocks right now is the fact that, we're going to have rate cuts in the future, yes, and expecting that AI technology is going to bring up margins. Right now, that's the key. We're looking for gross margins. Prices are going down, inflation is going down, as we know, but is that going to affect pricing power for these companies? We want to see if these mega cap companies that we trade mostly, let's see how their stocks react based on their forward guidance, which is to me, so important, the most important. We want to know what you're getting, right, based on their forecasts. Let's take a look at the volatility index. That thing spiked, and again, how often has this spiked? Pretty much many times. Got a spike to 1652. Again, we'll see if we get a little bit of a pullback here, or if this is just a start of a new trend. Anything below 20 to me is still a bullish market. If we start breaching 20, then VIX needs to be in that conversation. But for now, again, we saw this in April OPEX. We just had July OPEX. We had this in, I think it was October OPEX, and then March OPEX. So it seems to be those OPEX dates, like that third week or second week of the month, certain months, that's where we're getting that VIX spike. So we will see what we get in terms of the future. Equal weight RSP, again, something I'm always looking at. Got that flag breakout. Now we're retesting the highs here. So we'll use 168.52 as our resistance. If you were watching the video last week, I talked about RSP being one of the stocks to watch for the week, equal weight, and it hit 172. So it hit target. Pretty good stuff. I do have merit calls, so I'm going to talk about Bitcoin, and Bitcoin is up. Now, this may have a fundamental reason. It's no secret that former President Trump is bullish, I guess, on Bitcoin, or he is a friend of the crypto industry. Meanwhile, President Biden with the FTC probably isn't the biggest friend to crypto at that point, based on what their speeches are and their legislation, whatever. But with that being said, it doesn't matter, because we know that we're going to get to 70,000 on Bitcoin. This is just making it easier and faster. Let's be real. So again, we have the trend line. We ride Mara. We're doing it again until we get to 70,000 on Bitcoin. I think you ride this train higher. 72,204 is another alert higher. So we'll see if Mara gives us some juice. And so far it has. Let's take a look at the hourly. There you go. You got a possible bull flag on the 1 hour. I said that on the live market blog, and you could see we're still outside of this downward channel. So all this commentary and all this stuff I do, if you like these kind of videos or the morning note, as always, because I'm putting this on the blog, the options signals group, I put this stuff all the time. I just dropped my pen. Sorry. So again, I'm always giving up-to-date stuff. That's kind of how I like to do the server stuff. I love answering your questions, obviously, but I like answering your questions before they're even asked. So whatever we have open, you guys already see it there. The idea is to give you guys constant updates on what's important. Most of this stuff that I talk about is about positions we have open. Anything else in terms of broad economic data or news, that's going to be more on the live market blog, and that's for everybody. And then, of course, you could always follow us on our social media pages as well. Okay, so let's go ahead and go over the earnings that we have this week and what kind of watching and what I'm not watching. I dropped my pen. Sorry. All right, so Verizon, Monday, again, don't really trade that. Spotify, I don't trade that either. UPS, I didn't see anything special. Tesla, or we talked about that already. Let's talk about Google. Alphabet. That was part of the watch list last week. We were leaning short, and did it pull back? It did. I just didn't trade it, unfortunately. Let's focus more on the small caps. 179.78. Looks like we hit that target. That was the target I had there. We'll move that here. Move that oval. Okay, so we have earnings. So what we want to look for is a break below 176.35. And why am I looking at that specific level? It breaks inside here into this upward channel. And remember this right here? This was the peak that we got on their last earnings. So if we break below that peak, that may be next level of support. We can play the 170s all the way down, maybe into the 160s. We will see. But 176.36 on Alphabet to wake me up to the chart. How's that? All right. Starting to get a little weakness now in futures. Oh, not too bad. All right. So we got Visa as well, Enphase, AT&T, Chipotle. Chipotle just had their split. American Airlines has been taking a hit. Let's take a look at those two together. Hope this is not taking too much of your time. Feel free to use the fast forward button at your leisure. And make sure to hit that subscribe button if you like these videos. 1034. That's the break level for American Airlines. We know they had their outage recently in terms of the cloud strike thing. 825 is the COVID lows. So again, I don't think American Airlines is going to go anywhere anytime soon. One of the largest domestic air travel companies, airlines. 1034 breaks. $8 is next. I think, in my opinion, that more than likely the expectation is so low that American Airlines earnings should be positive. So shorting here in the hole is kind of tough. If anything, you're probably looking at the $10.86 calls. I think it's just been so hammered, and you're worried about COVID low support. Yeah, it looks like American Airlines, to me, is going to bounce on a relief rally of some kind. That's just my prediction. Let's take a look at CMG. This is Chipotle Mexican Grill. This is newly split Chipotle. So ever since that split has been coming down, and you are right here at the 200-day. Does it hold is the question. And if it doesn't, well, it's going to be some tough sledding for Chipotle. Now we're talking about $50 to possible 45, 45 being the next major support. That was kind of that resistance that held from the beginning of the year. So, is it game over for Chipotle for now? Kind of buy the rumor, sell the news, the rumor of the split. The split happens. Very, very common, guys. This is nothing new. I think Chipotle is a great company. Might be a little expensive in terms of price to earnings multiple, but it is a grower. It's a growing company. So we will see in terms of their earnings what they have to say. Let's see if they hold to that 200-day. In terms of the market itself, again, I'm leaning bullish. So let's take a look at S&P rather quickly. We talked about the NASDAQ breaking above 20,000. We are below the 20-day now on S&P 500 futures. Break below 55.32. I think you target 5,500 rather easily, but the main level of support would be our 50-day moving average, the 50-day moving average for NASDAQ, 50-day moving average for S&P. That gets us to 54.57. And again, that would fill the rollover gap from June. Welcome to it. So weakness of end of July and weakness into August. Welcome to the summer slump. Or we have an amazing earnings season These companies raise guidance, raise buybacks, raise dividends, you name it, and we soar. And that would be great. I just don't think that'll happen. I think we have a high bar going. Netflix had stellar earnings and still fell. May not have fell as much, but it fell. So let that be kind of our barometer moving forward. Netflix is a growing company as well. We will see what happens. Have a great rest of your evening. Thanks so much for joining me. I will see you guys tomorrow for the next morning note on YouTube. Make sure to like and subscribe. We're trying to get to 10K subs. That starts with you. Thanks again. Cheers all.